Welcome to this new video. In this video, I'll explain what happened with Chinese stocks and how it will continue. Then we'll look at what prediction I made in the past and whether it was correct. Afterwards, we'll examine one of the most important stocks in the Chinese market that should be part of your portfolio. Let's begin. A newsletter writes, Breaking. China's stock market posts its best week since 2008 as widespread stimulus begins. Such a rise is not normal, and there will be many setbacks so that you can buy more. We could see very strong increases in most Chinese indices. For example, the iShares MSCI China ETF is up 20%, and the Hang Seng Index has also risen very strongly. This can be observed particularly clearly with individual companies. Alibaba, JD.com, and PDD Holdings have gained significantly. I'm analyzing one of these stocks today, and that's Alibaba. This will be very exciting. Now, I'll explain what actually happened. The People's Bank of China has lowered interest rates by 0.5%. They haven't ruled out taking further steps to lower interest rates. This is, of course, very interesting for Chinese companies, including banks. With the announcement of the new stimulus package, they hope that foreign investors will invest in Chinese companies. It's about approximately $200 billion intended to stimulate the economy. Now let's look at how the Chinese companies in our YouTube portfolio have developed. With Chinese stocks, it's important to invest broadly or in truly high-quality Chinese stocks. I've decided on high-quality Chinese stocks, JD.com, where I'm up 60%, then Alibaba, where I'm up 56%, Baidu with 17%, PDD with 45%, and NEO with 50%. These have all risen strongly. 6 months ago, I had already made a very detailed video about the Alibaba stock, in which I clearly said that Chinese stocks look very bullish. And that was correct. Now I'll briefly go into Alibaba's financial data. I won't go too deeply into the finances because they haven't changed much. But if you want a deep insight into another Chinese stock, write it in the comments. This video is not investment advice. Alibaba has a PE ratio of 25 and a PS ratio of 1.8. They have revenue of $135 billion and a profit of almost $10 billion. That speaks for itself. When comparing with other e-commerce companies, it would be Amazon. Alibaba has almost the same business model as Amazon. Then let's look at the future prospects. The future prospects look really good. Alibaba is expected to grow by double-digit percentages, and you simply can't talk that down. The diversification is also very good. They generate their income diversely with Alibaba International or with other e-commerce companies and their famous cloud services. The financial health also looks better than some American companies. They have only a 19.7% debt-to-equity ratio, which is good. Now let's look at which asset managers own the stock. The largest shareholder is SoftBank with 12.9%. Then come the American asset managers, which own 3.7% and 2.9% respectively, but don't have as high a weighting as with American companies. Michael Burry made the biggest move with a very strong China weighting. In his portfolio, Alibaba makes up 25.9% of the portfolio, JD.com 15.5%. Calculated together, it makes up a very strong weighting. And if you look at the price development, they have also risen very strongly. In general, Michael Burry knows how to value discounted stocks. With the announcement of the package, many hedge fund managers will probably start investing in China. Many wonder how they should invest in China. Either they buy 5 to 10 high-quality Chinese stocks to be diversified in China as well, or they buy a China or emerging market ETF. But of course, everyone has to decide for themselves. This should not be seen as investment advice. Now let's look at Alibaba's price developments. What I'm showing you now is the short and medium-term expectation. In the next chart, I will show the long-term expectation. In the last video where I presented Alibaba, I had a target zone between $65 and $82. It was correct, and we have already risen by 30% from the target zone, calculated from the upper edge, which is quite strong. Then I had a second trading target zone, which was also correct. Currently, it shows that we are in a target zone, but this zone only serves as an orientation. The next relevant target zone is between $90 and $100, and the size of the target zone is 10%. so you can also trade it with leverage derivatives. This target zone should be an initial target zone for investors to make an initial investment. I would advise everyone, if you are too heavily invested in American stocks, to diversify more in Asian markets. For those of us who are heavily invested in American stocks, the Chinese market could serve as a hedge. The Chinese and American indices have an inverse correlation. This means that when American stocks correct, Chinese stocks rise. The probability that the bottom of the Chinese market has been found is very high. We could see a slow rotation of money within these 5 to 10 years. My estimates are that Chinese stocks should grow on average 15 to 20% per year. Let's look at the medium-term price development of Alibaba. The stock could reach 35% to 50% in about 6 months to 1 year, which is really good. Of course, it can change. These are just my minimum targets. Then let's look at the long-term view. Long-term, the Alibaba stock looks very good. My target zone is between 480 and 740 US dollars. Many don't believe in this price development because they weight the China risk too high. They mention many macroeconomic problems, and they're not wrong about that, but in recent years we could observe an inverse correlation between the economy of the respective country and its stock market. The second problem is the Taiwan risk. I assume that no war should break out in the coming years if large asset managers invest in Chinese stocks. If war breaks out, American stocks will be almost as heavily burdened as Chinese ones. We are in a very risky and complex market. No market participant is currently adapted to this market. Back to the chart, and let's look at how much short potential is possible. For long-term investors, it could be a very good opportunity to invest. I estimate that the stock has long-term potential of 357% to 588%, which is above the market average. And yes, I hope you liked the video. Subscribe and like the video, and write in the comments which stocks you want analyzed. I will also make videos about cryptocurrencies, which look very exciting. Until next time.